barring Wipro. And today, of course, all eyes will be on Infosys. So let's try to understand that what could be in store going ahead, how are the valuations looking like for the sector, and what's the overall outlook. For this, we are being joined by Kumar Rakesh, India analyst of IT and autos at PNB Paribas, joining us on the show. A very good morning and thank you so much for your time. And firstly, help us understand that with respect to Infosys, what is that you are building in, and with respect to the commentary, which are going to be the key monitorables as per you?
Hi, good morning, and thank you for having me on the show. For Infosys, we are building relatively stronger growth in the context of rest of the IT services name. We think Infosys will outperform the larger pack. We are building more than 2% sequential constant currency growth for the company in this quarter. That will be partly helped by the acquisition they have done. It's about 40 basis points of growth coming in from that. But even excluding that on an organic basis, we are expecting them to report a healthy 1.6, 1.7% sort of a sequential growth. And that is partly also on a very low base of the last quarter. Fourth quarter for Infosys was quite weak. And hence coming off from a low base, it should see a pickup in growth. From the management commentary perspective, this earnings season, definitely at the start of it, when TCS reported, it really started the debate on whether the IT services demand actually has started seeing a material hit. And possibly Indian IT services companies, are they seeing a bigger impact compared to some of the larger peers? Because the commentary which was coming in from the global peers was relatively far more stable demand environment. Through the earnings season, we have seen that commentary to largely converge towards a stable demand environment. And we would be looking out for similar commentary from Infosys as well, that demand environment continues to be stable. And that's what we would be watching out for primarily. And obviously the guidance as well, built in what is the commentary and what the guidance the company is going to give. Is something which will be the key focus.
Right. Okay, that's the take coming in right now on what to expect from the, large cap IT player. That's Infosys, of course, which is due to report its numbers. But Kumar, what is your sense on what the pecking order is like right now, so far at least from the earnings that have come by? Because it was always TCS up there and then Infosys and then the rest. Has it changed at all after TCS and Wipro's earnings?
At the start of this month, as in with our preview, we had shifted our preference to Infosys over TCS. Part of the reason was that we do see that TCS has some of the client-specific issues that they will have a more lumpy performance. That being said, TCS valuation continues to look very attractive, and hence there is a downside support in the TCS valuation. That being said, from an outperformance perspective, we think that Infosys could be a preferred pick, partly because of valuation, but more importantly because of the growth outperformance that the company can deliver compared to most of the other large cap peers in the sector. And margin also seems to be relatively more stable. We'll have to watch out how that goes out today as they report. But our expectation would be that Infosys earnings growth would be among the highest this year compared to most of the other large caps.
Beat at least on Infosys. Hi Kumar, morning. This is Nehi joining in. In terms of the verdict that we've seen across the board from large cap IT names so far, we've either seen a miss versus estimates or inline, nothing positive. By when do you see this trend reversing? Because the guidance that some of the companies have given, it does say that by the end of FY26, they can expect some improvement in margins. When do you see this turnaround coming about?
Yeah, you are right. Actually, the general performance in this quarter has been quite mixed, largely disappointment, a bit on the growth. Also on the margin for many of the companies, it has been a disappointment. A lot depends on the macro, how the US macroeconomic environment starts shaping up. There is a fair degree of uncertainty. A lot of tariff-related deals are yet to be signed, and that continues to elevate the uncertainty, especially in verticals related to retail, CPG, and manufacturing, especially automotive within manufacturing. And hence, those verticals could take longer to start showing any recovery. The good news is that the BFSI vertical, financial services industry, continues to remain quite resilient. Some of the companies even called out that even discretionary spending in that vertical seems to be there. And hence that is one vertical which will continue to drive the growth for the next couple of quarters. Technology services is another vertical vertical, which seems to have bottomed out and start showing good results. So these are the two verticals which we would expect to start driving growth. And as the macro starts improving, the trade deal starts getting signed and the uncertainty starts coming down, hopefully by the end of this financial year, we would expect the rest of the verticals also to start showing recovery. And once that happens, then the FY27 essentially becomes the recovery year, which is where investors will start focusing on that this financial year will largely be a low single-digit growth year, but can we get to the mid-single digit sort of a growth in FY27? And if that happens, then the interest will start coming back into IT.
But Kumar, the other debate that is going on is with respect to the AI transition, because some experts do believe that for Indian IT companies, they have always managed to get hold of the latest in technology, and this can hold true yet again as well. But help us analyze your take that how Indian IT companies are expected to win this particular race. That do you believe that Indian companies are well versed to actually go ahead and adapt this particular technology, and B, which companies can actually be the early winners over here?
So you are right, we agree to that. If you go back over the last 2-3 decades, starting from mainframe transition, then the digital technologies came, a lot of SaaS players also came in the market. Through all those transitions, the expectation was that the Indian IT services industry will take a hit, but that didn't happen. Actually, if you see over the last 3 decades, we have never seen Indian IT services industry's revenue to decline on a year-on-year basis. So that's quite a resilient performance. And during this period of time, we have seen the dot-com bubble, the global financial crisis, multiple macroeconomic challenges in Europe and US, and the COVID. And despite all of that, through all these phases, Indian IT services industries has shown quite a strong resilience in its performance. So we are also believer of that it's a quite resilient industry. That being said, on the GenAI side, while we do believe that it would be net neutral to net positive for the industry, there would be some who would be a bigger beneficiary, and there could be some companies that could see a negative impact as well. A little too early to start calling out that who would be a net negatively impacted, but there are some companies who have started taking some initial lead in terms of building capability on GenAI and also participating in clients' transformation on the GenAI journey. Infosys is one of those companies. They have done a fair bit of work. Their partnership with some of the global GenAI leading hardware companies, as well as their own capability on the small language model which they're building, seems to be quite promising. The other company which definitely stands out is also Persistent Systems, that we think is doing a fair degree of work on GenAI, and some degree of that decoupling between the employee growth and revenue growth is already visible in that company. So these are a couple of companies which we think has already started showing some initial signs of leadership or performance from GenAI side, and we are closely tracking that.
The show. Thanks for your time today. Okay, let's move on. And since we're on the subject of IT, let's bring on board